Okay, good afternoon, everybody, and welcome to today's edition of Ask the Experts. My name is Capolingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we delve into the depths, the grisly depths of your portfolios, try and pick out the winners, turf out some losers, and maybe teach you a thing or two you didn't know about investing as well. Now, all of that is going to be wonderful. We just need to get through the disclaimer before we can get there. The disclaimer says that everything we're going to discuss today is what we call general advice. It means it has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general information, you should consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important. You should read it. You can hit pause on the replay, which I'll post to various social media channels later on in the day, or head to the website, download our product disclosure statement, PDS, for more details. Apart from that, pretty simple today. Going to head over to you. Find the Q&A window somewhere in the Zoom if you're watching me on Zoom. If you're watching me on YouTube on the live stream, I've got your chat window going over here on my left. And if you're watching me on the Twitter live stream, I've got you going on the right as well. So hopefully I'll be able to get to you over the course of today's presentation. Let us now head over to here, which is where the charts are. We'll kick off with the charts. Got some requests coming in. Look, normally I do the whip around the grounds. I might not do the whip around the grounds today because I do them. I do that in my Monday session. So there is a YouTube video up on the Think Markets YouTube page, and it goes through all of the various indices, commodities, cryptos, anything you need to know about markets. That's where it is. So maybe we'll just stick to the stock requests today. And we do have Damien first in best dressed with a request for ZIP. Now, what I'll do, I'll give you my best technical and fundamental where possible. We'll generally kick off with the technicals. I'm going to zoom in. You have to zoom in. It's obvious I have to zoom in because I can barely see anything on this ZIP chart, because if I zoom all, you can see the... Oh, it's like, I don't know, it's like Days of Our Lives, isn't it? It's something akin to daytime television soap opera is the ZIP drama, where it went from zero to hero just after COVID and back to zero again. We can see many of these hallmarks of supply that we talk about so often in these sessions around here. So some supply side candles, so something like that might not have been enough necessarily to get you out, because what a great run it was. We're not going to just jump at every shadow that we see, pun intended there, because we're talking about candlesticks. What we might look for is signs of increasing supply. The supply is ubiquitous. That means it's everywhere all the time. Hey, it's the stock market. There's always somebody that wants to sell for whatever reason. And they're not always bad reasons either, or bad for the stock that you own. So certainly supply helps the price go down. And if you're long or you're invested, that's not a good thing. So we're going to keep an eye out for it. There's the big supply candle there. Maybe you wouldn't jump at that shadow, but certainly when you see this lower peak being formed here, and we know that these peaks, another word for peak, of course, is that point of supply, I call them. This is your point of supply here. And when you have points of supply that are falling, there's only one thing it can mean. It can only mean, think about it, supply is building or demand is diminishing. And neither of those two scenarios are good. It could be a combination of both. So we've got building supply, and then what I like to do, and I like to do this at the start, don't I? Because it allows me to make that point, and then we can move on. But between your 2 points of supply, you're going to get one of these things, and it's guaranteed. It's impossible for it not to be there, and it's a pod, which is called the point of demand. And what I like to do, I say, look, this is pretty much not only your point of demand, but it's kind of almost your point of no return for your shorter term traders, your momentum players. And that's where we're going to be exiting some. And I say some, it's very important, because I don't like to be all in and all out. Because if I'm all in, it forces me to be right. And if I'm all out, it forces me to not regret that decision. So I like to step in, step out. And we would like to, typically, when we see this lower point of supply, you might do something like this. You might slash 1/3 of your holdings. Certainly when I see a candle like this, that's for me. That's pretty much all over Red Rover. I'm gonna go another -1/3 on that candle, because that is one hell of a nasty supply side candle with its upper shadows, its low close, and its long body. And I don't even think we're waiting for the close beneath there. Well, actually, it happened here, didn't it? So in fact, it was here to be perfectly correct, but certainly you would need your head read if you did not exit all of your Zip shares on this candle here, which then closed back beneath the point of demand. Now, did you get the top on Zip? No, you didn't. You didn't get the top at 14.50. Woe is me. But you did get out at some pretty good prices compared to where it is right now. And that's what we're going to talk about, where it is right now. Down here, got down to 50 cents, isn't it? So if you got 11, 12, 13, $14, maybe you average 12.50, I think that's pretty good. Okay, now I want you to take everything we've just learned and turn it on its head. So every time I said supply, change that to demand. Every time I said white candle, upper shadow, change it to, no, black candle, upper shadow, change it to white candle, lower shadow, because it's really important to understand how tops are made, because invert that, that's how bottoms are made. Okay, so we need to see some white bodies coming in, okay, to tell me demand is there. We need to see points of demand now building. So if I'm going to draw in some of these peaks and troughs in here, so we're going to go call that trough. It is a trough, peak, trough, peak, and we don't know where this next one is. I'll draw that line and I'll go past it just to illustrate that we don't know where this next trough is going to be, because we haven't had this switch back into the uptrend yet, okay? But do we have rising troughs? Here we do. Do we have rising peaks? We do. Okay, so that's all pretty handy. We like that. Do we have not nice white bodies? This one's not bad. This one's not great, to be honest. That's not great, and then they're lousy. So no, we probably don't really have those really clear fingerprints of excess demand in the market right now. I need to see lower shadows, not upper shadows. But look, there's potentially a changing of the guard here, and it's very, very early stages. The short-term trend here, that's my short-term trend ribbons, my 21 and 34 EMAs. I don't have secrets, okay? I don't have any secrets from you. 21 and 34 over here. You don't have to pay thousands of dollars to come and listen to me on a Tuesday to get my secrets. They're all there for free, because that's the way it should be, you know, the sharing of knowledge. Now, we have, yes, the short-term trend starting to turn. You can see the traffic light system there. It's gone from pink, which is a downtrend, to the orange, and that's because the price action is getting better. But the long-term trend very much set to the downside. And really, we're going to have to get above that high there. That high is 87. So close above 87, I'm going to become moderately interested in a Zip for a very, very speculative. Maybe, and I have to be careful when I write these down, so I don't want to come back and say, I told you to do this. We'll review this. Don't worry, we'll review this when it happens, but potentially, you know, close above 87, I'm going to be going for a very specky 1/3. I can never add more than 1/3 at this stage, because we have to deal with the elephant in the room, and the elephant is about 5 tons of dark pink zoned, isn't it? So we're not going to get too excited and talk above that. And there's some points of supply here, which are pretty massive, because let's face it, a few people here thought that Zip was going to go back up again. I was one of them. I actually thought it had a pretty good chance. I got that wrong. But there will be a few people, I didn't get in, but there'll be a few other people that did, that would be thinking, well, just me on that one. If I don't, shout at me in one of the chats there. Let's go here, Zip. Let's have a look. I'm curious. Hey, what a market darling. How's it looking on the fundamentals? Now, when I say fundamentals, I mean, what do the brokers think of it? Okay, so this is 11 of the biggest brokers, your Goldman Sachs, your Credit Suisses, UBS, Macquarie's, all of those are in here, surveyed by Thomson Reuters, who has this product called Refinitiv Icon, which I have a subscription to, costs about $2,200 a month, by the way, a month. Think Markets pays for this, that I can then bring and put in front of you. So thank you to Think Markets for investing in your education. And they will get the surveys and all the estimates, and their recommendations and price targets. So we've got strong buy here, 0, 1 buy, 3 holds, 5 sells. 5 sells, 2 strong sells. So they're pretty bearish about it. Having said that, with all the bearishness in their recommendations, their price target is 5% above current at 82 cents. What we do have is all the historical stuff. So this stuff is in the bag. That's actually what's happened. And then we've got the broker, the consensus broker estimates going forward. And I love this spreadsheet. It is so neat in just so quickly distilling all the fundamental stuff you need to know about a company, I believe. Okay, now you can go there and read all the company statements, but I think you'd be wasting a lot of time, because as my grandmother, my mum's mum used to say, Carl, when I was a little boy, she said, don't fart against thunder. Okay, a very, very smart lady she was. Don't fart against thunder, because you can do all that analysis, right? You can go dig through the old Zip annual report there, delving into the profit and loss statement, the statement of cash flows and assets and liabilities and all that mumbo jumbo, and you can come up with this most amazing valuation for Zip. But at the end of the day, who cares what your valuation is? And I bet you it's not very good compared to those 11 juggernauts, enterprises who are hiring dozens and dozens and dozens of analysts who are far better trained than you, who have much better resources than you, that are coming up with a better valuation. Okay, in this story, you are the fart. They are the thunder. Okay, so kind of get the picture there. Stick with the thunder. Now, EPS on expected EPS, not my numbers. Actually, that is in the bag. These are not my numbers here from 23. The 11 broker consensus. 24 minus 14, minus 11. Okay, now I've been covering Zip for a while and looking at this spreadsheet for a while, and I do remember when maybe it was 23, 24, we were supposed to have a profit. So you can see the problem here. This profit, this elusive profit, this EPS keeps getting pushed out. It's now out to FY26. I'm not going to go any further. I don't think we need to bother valuing this. It's going to have a P of 27, maybe in about 3.5 years time. Okay, so let's keep moving. Anyway, we introduced the spreadsheet and we had a look at the chart. Let us go to the next one. Let's go to YouTube. I'm not sure where the tweets are coming from. Let me do one thing and see if we've got any tweets here. Check my notifications maybe. Nothing seems to have come through there if you're watching me on the Twitter stream. But I do have many people watching me on. Everything just disappeared off my window. I must have hit the desktop button. So now all I can see, everyone, is desktop. And as you would expect, I've got about 50 different applications going to make this happen. So bear with me while I make it all come back. Okay, Andrew on the YouTube stream, can you please give us your opinion on Wesfarmers? Is it a buy? Let's have a look at Wesfarmers. Another classic blue chip there. Got beaten down, didn't it? Got beaten down as the market reversed. And it's coming back. It's coming back pretty well. You can see we've done some scratchings on this in the past. What did I say last time? Oh, I said I was pretty bearish on it last time. I said sells at 55. I said holds at 40, and I think buys at 5. Well, I don't know where that was, but it's gone a little bit up. So I'm happy to admit, happy is not the right word, but ready to admit I probably got that a little bit wrong. I'm not deleting it because I don't want it to be there. I'm just deleting it because I want to see what's going on. And I'll give you my new sets of probabilities for whatever it's worth. And if you're here, you probably think it's worth something. If you don't, there's a button somewhere you could press and go. Watch maybe some TikToks or some funny cat videos as well. The internet is a wonderful thing, everybody. Go and explore it. Okay, let us have a look at the price action. So I'm going to draw in some peaks and troughs here. And it all looks pretty good, doesn't it? I mean, generally high peaks and high troughs. The candles are, generally white. There's a few black ones in there, but I don't think there's anything so sinister. And the price action is telling you that the white ones are beating the black ones. In terms of supply, I do think this is a key area, though. I think this 49.50, there's some supply. There was some supply there in the past, and then you kind of look up, and there's a bit more supply there, and there's probably a bit more there, and there's probably a bit more there. In terms of demand, I should change these colors so we can see green for demand and red for supply, but imagine those black ones are red. Demand look clearly down here. There's a bunch of demand, and then probably through sort of this zone here, and I'm looking at that peak. You can't see anything. Let me go back to here. And now you can see everything. I'm so sorry. I will do better. But we get the picture. Peaks and troughs are rising on Wesfarmers, more whites than blacks, and the supply zones are there in black, and the demand zone there is in green. I would say that we are bumping up against some significant supply. I would suggest to you that the short-term uptrend is intact. I would suggest to you that the long-term trend is in the process of changing, but is still early stages. You can see through the traffic light system here, the long-term trends have gone back to orange, so that is encouraging, somewhat encouraging. But I don't think it's going to explode. I don't think you've got this huge big bang of upside because it'll be impeded at each of these levels. So if I could give you a new set of probabilities, so if you missed it there because I was on the wrong screen, I said 55 sell, 40 hold, and 5 up. So it was more sort of a hold / sell, and it wasn't much of a buy. It has gone up a little bit since then, I would suggest. So I'm going to go now. I think hold is the most obvious one. This is tricky. I have to do this. Let's go hold. Hold is probably 50%. I wouldn't buy this. I wouldn't buy this. I'm just not interested in buying this right now with my own money. How you do it? You want to do with yours? Look, let's just go hold. I think if I started to see the black candles in here, I'd be really concerned, because then it would become more of a sell. So sell into the strength, because the overall trend is still down. And I don't think buy's on the table, because even if it gets through here, it's still got too much to deal with. This is in the too hard basket. I'm going to go pass on that one. Look, let's have a quick look here, and I promise it'll be super, super fast, because I know there's so many people that want to get stocks covered. All capitals, please, Carl. So quickly on the Wesfarmers, because look, that was a boring chart. I'm sorry, Andrew. It's so boring. And this is no doubt going to be very boring as well. 14 estimates, very well covered. Strong buy, 5 buys, 4 holds, 4 sells, 1 strong sell. It's very polarizing, isn't it, Wesfarmers? A lot of brokers covering it, but they've all got different opinions. Look at that, smack bang on target at the moment at 48.38. EPS line is where I go next. So I want your eyes to sort of follow my eyes. So I go, what are the brokers doing? What's their target price? Okay, now what do I think? And what I think is based upon earnings growth primarily. So I want to see this number being more than this number, and that number being more than that number, and that number being more than that number, and that number being more than that number, and making this compound annual growth rate being, significant. What's significant? Well, that's about average for the market. So 6-7%. If it's a good year, the market earnings might grow by 10%. That'd be an incredible year. If it's a bad year, they might grow by 3%. So 6 or 7. Bell curve sort of stuff. That's the middle juicy part of the bell curve, right? So about market growth. Well, do I want market growth, or do I want above market growth? Do I want above market growth and a really good valuation? Or do I want market growth at an average valuation? I would say at a P of 23. I don't think this is screaming cheap. This is not a bargain here. Okay, so, for something that's growing 6 or 7%, I might pay 15. Okay, so if I go here and I set a target, my limit for something that's growing about market would be 15, because in the long run, the market's PE is about 15 at fair value. Okay, and even if I assume a low risk rating here, you can see what it does to what I believe is fair value. And this is just me. This is not the brokers, right? I believe Wesfarmers is as much as 30% overvalued. And that is if you assume a low risk rating, because if you go to moderate risk, because the economy is going to be bad, it might get a little bit worse, right? Now, you might say, hey, Carl, how can you be so far out? Well, this is what I would pay for that growth, okay? Some of these, the more bullish ones, they are happy to pay more market consensus, and this is the market consensus. And now you can see it's only 4% overvalued, and this 45.94 for all intents and purposes is very close to what the market consensus is. And so I'm with this person, right? So I can guarantee whoever this is, it could be UBS, probably UBS. They're very bearish on stuff. I think they're just very conservative with their valuations at UBS. And I don't think that's a bad thing. But let's say, hypothetically speaking, pure hypotheticals here, I don't want to get sued, that's UBS. They might have a similar limit to me. They might say, I'm not paying more than 15% for 6% growth. And that puts them in this category, okay, where I would be. And then there are other brokers that only see the best parts of Wesfarmers, okay? And this is how fundamental analysis works. There is just as much randomness and guesswork and vagary as there is with my technical analysis. No, that's not true. My technical analysis is spot on. Supply and demand, black and white candles. Okay, let us keep moving. Let's don't forget to change the screen. Thanks, Ellie55 over on the YouTube. Let's do another YouTube, and then I promise I'll do some zoomers. Let's go STA from Jinx. Is STA looking better? They are heading into production. Oh, that's nice. So Strandline Resources, I don't know what they're producing. It doesn't matter to me. All I care is what the chart's doing. But yes, it's good to know that. It's always nice to know that something is actually going to start to make money. I mean, that's the whole point of any of these enterprises. I think it looks okay, and I've probably said that in the past. We might have done some analysis here on tops, but you can see the arrow I drew. I don't think that was a prediction. I'm quite certain that wasn't a prediction, but I might have actually said, look, if it breaks down, sell out. So I don't think it's going to do that. But it's actually gone up. So I'm happy to go hold on this one. I don't think it'd be to the top of my list of buys today, because it is going to face a great deal of supply, not just there. I wonder how long ago we did this, because my supply only goes to here. So maybe we did it all the way back here. Okay, I don't know. I can't remember every stock we've ever covered, but I'm going to move that. I'm going to say, look, here's the supply. We're a bit closer to the supply than we are to where the demand is probably going to be, which is down here. And in terms of risk reward, it's tough. Look, I think it's okay. Definitely hang on to it. If I were you, probably going to get into the 50s, but I can't call it a screaming buy just on the basis of there's just not enough till we get there. Now, this will change. You must say, hey, Carl, that, well, when does it become a buy? Like, I mean, if you think it's going to go to $1, I don't know, maybe it will. Why wouldn't I just buy it at 48? Well, okay, I wish I could put more white space on the side. But when you let's zoom out. So just get you this concept here. So let's recalibrate that and zoom out. And when we zoom out, and we can see, well, actually there's nothing. You're going back to 2013. It probably was a different company looking at different stuff, kicking over different rocks in the desert back then. So completely ignore that. Pretend this is blue sky. And I think you can. I'm not just saying pretend, because I don't think any of that supply matters. If you're still in it from 2013, you're not thinking of that number anymore. Okay, you're thinking of other stuff. And most people have probably rotated through by then. So this is effectively blue sky from here. So what I mean by getting this reward to risk right, this is your trade craft, okay? Let's say it does come in here, all right? It pulls back, it does all the right stuff, and it starts to go again. And it changes your reward to risk, right? Because your demand zone moves up to here. This is all hypothetical, right? And then your next supply is nowhere. Like, it's completely blue sky. So your reward, your risk is now very little. It's just this bit, and your reward is technically infinity. Okay, so I hope you're getting this. It's difficult for me to explain. I would rather pass on this now and pay 4 cents more later on the basis that the reward to risk is so much better than buying it now on the basis that we could get a massive whack of supply coming here and then nothing happens. Okay, so we're trying to find charts. And this is effectively what you're doing every day. You're trying to compare all the charts and then find the best opportunities, because you can't invest in them all. I always say, look, invest small amounts in many stocks rather than big amounts in fewer stocks. I think that's a better way to go, so you don't get emotionally attached to any one thing. Okay, the more emotional you get about your holdings, the worse you trade. We know that. So I'm going to go pass on that one, but hopefully, in one breath, me saying, look, I think it's fine, hold on to it. Hopefully you also understand why I'm not a buyer as well. I'm not going to go to the spreadsheet for this one because there won't be any broker coverage, and then therefore we won't have a valuation. Let's head over to the Zoomers. Now, Zoomers. Let's go to SFR. Oh, Craig, leave me alone. Please stop giving me Sandfire Resources. I was wrong. I got this wrong. I thought this was going down. I really did. And, this here was dead. It was dead, mate. It was done. It was dusted. It was never going to go back up again. A complete technical breakdown. All supply, no demand. And then you might say, well, you should have known. You should have known, Carl, that wasn't going to go down because it's such a quality company. Let me look, Carl. Just sit down and let me tell you about the quality that is Sandfire Resources. And I will say, yes, start talking. I'm just going to go over here. Okay, so this is what happened. I mean, we saw that's the China 50. We saw the COVID, the apparent COVID easing of restrictions. Rubbish. It hasn't happened. There's still zero COVID. They've called it targeted lockdowns, but they're targeting the hell out of stuff. And cases have gone through the roof, and now we've got people dying in China. All right, so don't be foolish. But this is the plunge protection team, right? It's the China plunge protection team. You can't have markets going down because you're probably going to there's going to be a huge public revolt. You're going to get booted out of power. So we need to save the financial system. So what's the best thing you do? We'll float a COVID rumor. And there were social media rumors from various, CDC, disease control, whatever it is over there. And then do the property bailout, which is, I don't know, there or there or there, whatever. And let's just stick a Band-Aid on a broken leg, shall we? So this is that's the property thing. So this is what happens, and that's why I got it wrong on Sandfire. That's my rationale for it. Look at this monster here, the material sector, just invincible. And then we had iron ore, obviously, rally on the back of that. There's your iron ore chart. There you go. And then your copper chart, which is me getting to the point, which is high-grade copper here. So that's the Sandfire rally. But and this is where I'm getting back to Sandfire, look at this. That's a bit concerning. I mean, that's a really consistent, concerted, organised supply event, isn't it? Into that demand coming from that China news. Let's call it news. So I wonder what that means for Sandfire. Let's go back to old SFR. It looks good, but it looks good like the rest of the material sector. Something weird's going on here, everybody. And maybe I'm going to defer from answering questions on Sandfire because I don't get it. Something doesn't gel with me, but hey, I should just trust the chart and just shut up and just talk the chart. Okay, so this all looks very good. This all looks very good through here. The price action is good. The candles are good. The lower shadows through there are great. The fact that we've now established this short-term uptrend and the long-term trend is changing, and we've broken above it. We've come back, we've tested it, we've held it, and now we're pushing off it. This is all very good for a turnaround. There is a bit of supply here, but we've interacted with it. So that's your first test. You very rarely get through on your first test. Second, third tests are more successful. So I can really see this hitting $6 before it having another pullback from there. So balance of probabilities, I'm 75% hold. If I'm honest, I would not buy this thing because I don't agree with the material sector going up. But if I'm not me, I would go 25%, 20% buy, which leaves 5% for it sell. In fact, no, there's no sell. It's just I can't. You wouldn't sell that. There's no reason to sell that right now. Okay. Let us keep moving. I'm not going to look at the Sandfire fundamentals. I don't care. Let's go to the next one. Hi, Fernando. Hi, Carl. I love your webinar. Why do you use ATR as an indicator? Okay. This is a ripper question. H. I shouldn't call you Fernando. It's H, Fernando. So H. This is the ATR. So this is what H is referring to. And this is an ATR1, which is probably baffling, isn't it? Because if you've read your basic books on technical analysis, you know it says ATR14. Some people might use ATR21. That gives you a month. ATR63 gives you 3 months. Started to talk gobbledygook here. Why 21? What is 21 a month? Well, there's 21 trading days in a month. A month isn't, if you're a trader, a month isn't 30 or 31 days or 28 days. A month is 21 days, typically on average, and therefore 3 months is 63. We say 6 months is about 126, and then there's about 252 to 257 trading days in a trading year, depending on where you are. But I use ATR1. So really I'm looking here, it's just raw volatility, okay? So I've got my price action up here. I've got my volatility here. I've got my volume here. I've got my relative strength comparative here. That's what the RSC 63, there's that time frame. Okay, coming into. So this is the stuff I like to use in my technical analysis, and they all have to have a large degree of independence. What you will notice is not there is your MACDs, because they're completely bloody useless. Anybody, and there's so many technical analysts out there on blabbing right now. There'd be 1,000 of them talking to other people right now, not you, because you're listening to me, and they'll have MACDs and RSIs, and I'll tell you what, switch off. And if any of them are going to watch this in the replay, you can come and argue with me, because I'm telling you right now, you have no idea what you're doing, pal. Okay, you shouldn't be on whatever you're on. MACD, the moving averages are already here, all right? MACD is just moving averages. Why would you put more moving averages if you've already got moving averages upstairs? They're not doing anything or any more. Then your RSI is just price. It's just price within a range over a specific period and with some maths sprinkled into it. Use price action. Indicators are a complete waste of time. Bollinger Bands, well, maybe that's volatility, but there's still a moving average element, which is price. It keeps coming back to price. 99 out of 100 indicators are price-based, okay? Then you've got a few that are volatility-based and volume-based. So price action, volatility, which to be fair is based on price, so it's not independent, but it does give us different information. And then you've got volume, which I do believe is independent of price. And then you've got relative strength and comparative. I'm comparing this stock to the index, which is based upon the price of the two index, but it's using it in a very different way. So I'm adding layers of information that aren't necessarily completely tied to each other. The MACD is ultimately just price. RSI is just price. I can't remember all the other indicators. So I'm looking at raw volatility. So when I see a spike in the red bars and the spike in the blue bars, that's telling me something very interesting about what's happening in the market. I can't go into all that stuff today because I'm supposed to just be looking at stocks for you. But it does all mean stuff. It's not there by accident, I can assure you. I would love to, and if you know, I don't know if you're a client of Think Markets, petition Think Market and say, hey, I want Carl to just take us aside. And I'm not going to do this for free for everybody because I know most of you probably aren't trading with Think Markets, but for the people that are, I'd love to do more stuff with you because the better you can trade, the longer you're going to be a client and the more you're going to trade. And that's can only be good for Think Markets. I used to, in a past life, many of you will know this, I used to charge people literally thousands and thousands of dollars to come and spend a couple of days with me, and far more than that, the price of a small motor vehicle to be in my mentor program. I don't do those things anymore. I don't want to do them. I prefer just to do this stuff. Now, let us keep moving. FMG. This is what I enjoy. Fortescue looks top of the range to me, doesn't it? And I reckon that's supply in there. I reckon that's supply. Look, why would you buy it here? What are you gonna? Do you think it's going there, or do you think it's going there, or do you think it's going there? And when you start to layer on supply like this, you've got to question why you would be a buyer. I think there's a case to hold it. Short-term trend is up, long-term trend is changing. We've popped above it. We're probably pulling back to hold it. So I can go hold, and it's more of a hold. Well, let's see what I can get. Let's see what candles pop in here. And if I get the black candles, and we know what they look like, they are the supply side candles. So these are your classic supply side candles coming up. I like to draw them each week because we need to be reminded. We need to be reminded of what to look for because it's just pattern recognition, right? And that's why I don't use indicators, because the price is this is the price. Like, go to the source. The price is the source. Okay, so there's the candle, the supply side candle, copy paste. And again, don't waste your money on Japanese candlestick books because they're going to put 300 candlestick patterns in there that all ultimately, trust me, when you blend them and boil them down, are either of these two candles. They can, when you think about it logically, there cannot be to any other than these two candles. These are the two derivative candles of everything else. So these are supply side candles, and if you see them in here, then I think the probabilities change. And I won't be here on a Tuesday necessarily to tell you this, but if I say, oh, okay, well, so I think there's some sell element into this. We looked at Sandfire, and the price action was much better. It was hooking higher through that downtrend, long-term downtrend zone. So that I said, look, I don't think there's any reason to sell it. It's definitely skewed to hold. Personally, I can't buy it. This one, I think this one with that candle there, the second last candle, I think there is some supply in there. So I think this does come into it now. So, you know, you might go 25%, and then the hold might be the 50% to see where you can get to. I don't know. My percentages are lousy there because for me, buy is 0%. So anyway, make of that what you will. I'm a pass on Fortescue for Hanelli. Sorry, Hanelli, if that's your favorite stock. All right, let's go around the traps here. Any Twitters coming through? Not that I'm an expert on managing that. I don't think there are any Twitters coming through. It's a bit harder to get to those. That's all. Okay, let's go back to the streamers. Now, I missed a few there for LE555. Sorry about that. Let's go Whitehaven, because I know we want to talk about coal. And we're largely trimmed out of this, slowly getting out of this over the last few weeks. This is starting to look good again. I'm not sure if I buy it, but I like this. And this is a live candle. So we don't know whether this is going to close today. I should update this, sorry. So I'm just going to go off screen, click updates, because I do get that update here on the hour. And we've just had one. So this candle will change. So anything I say based upon this candle now, if you're watching me in the replay, if I said, oh, this is a screaming buy, you have to understand it's based upon what I can see up. There you go. See how that changes? So if you're watching me in the replay, go and check how the candle finished, because it will change my view. And you might say, well, that's a bit flippant. No. I'm flippant based upon what demand supply is doing. I think this is starting to look really good again. I'd happily add some back here, just on the basis of this price action. So when we're out of stuff, we're not out of it forever. And we might find we're actually getting in probably at a similar price that we got out. And you'll say, what was the point of that, Carl? I'm getting in at about the same price I just got out of this damn thing. And I say, well, because it might have done this. All right. And then you would have been really annoyed that you didn't get out. okay, because the market told you to get out. Well, we told you through all these candles. So I'm actually basically now I have to close here or better, and that let me give you the price. That high there is 918. The last is 912. Let's go 910 or better. Okay, 910 or better, and I would happily just go cheeky little 1/3. I'm not putting my whole portfolio on this thing, but I want to check it out. Okay, and it might flame out here at $10 and come down again, and we'll manage that when we get there. But I do that based on that candle. I'm going to do that. I know it's a bit of an aggressive one, but I think that looks very interesting. Let us keep going to the John. John's got the, let's do the lithium. Hey, why not? Let's do the lithium review because it allows me to put some clickbait type of title on the video, so you'll all click on it and watch it if you're watching in the recording. Yes, I got you. So let's do the lithium review and let's go LTR, which actually I think it's looking okay. I mean, I'm a happy holder on Liontown, John. I don't think you need to sell it. John, you might be concerned about that candle there. I'm not so concerned about that candle there because I think that candle's pretty good. And there wasn't a huge supply response here and here. And this is a demand side candle here. So I'm cool with that. Look, these aren't great. Look at the upper shadows there. It's not all happy days at Liontown. There is some pesky supply. So there is a fund or fund managers out there that are selling into this. Make no mistake. They are going, you know what, this has had a great run and we're going to sell into the strength. Okay. Now, either they are going to be right or they're just another fund manager that's getting out too early. In the whole scheme of things. And we won't know. We won't know until we see what happens next. But the demand seems very solid. Okay, yes, there's supply. There's a bunch of other fund managers hanging in there for the time being. What would get me more concerned about this, John, is, if I delete all that stuff, you know the drill. Okay, you've heard me talk about this a million times before. If we do that lower point of supply sort of stuff, and it could take days, or it could take weeks before we get it, but at least you know what to do, right? You're not sort of just fumbling around in the dark anymore, all right? This will be the POD, okay? And watch for the candles in here. The supply side candles, the two black, I call them the supply buddies, candles that we talked about in the last example, and then through here, okay? And then you would be starting to lighten the load. But I don't think this one is a supply event in itself for a minus 1/3. If you see that second one and it's a nasty black candle, that in itself would count as minus 1/3, and then you'd be minus 1/3 here, and you might only have a third left after that. Okay, but I'm a happy holder on Liontown in the meantime. Let us look at CoreLithium, CXO. Not as happy a holder on this, and I don't think we covered this last week. But yeah, this is nasty. So this right here, bang. Maybe I did, I can't remember. That would be minus 1/3. I wouldn't even ask questions after that one. I don't know if you're sort of getting the magnitude. There's a little shadow there, but that's nasty, especially when it occurs after this. Maybe we did talk about it. I talked about how when you make that new high, it's even worse. Or did I talk about it on Ausbiz last week? I know I did it covered on Wednesday. So the problem is, when you make that new high and then you have that candle next, it's even worse because you've got to think about all the people who bought it on this day. They bought the breakout, right? Because this is how technical analysis can be cruel sometimes. They bought this breakout, right? So they all piled in, the technical traders who read that technical analysis textbook, they buy the breakout. And I don't mind that idea, don't get me wrong, but they are really regretting that decision on this day here. Okay, so you've got a bunch of supply in here. Like you can't imagine. You can't imagine. And to be fair, I think many of them technical traders, they just cut and ran the next day, didn't they? So who's left in it now? I don't know. The hopeful. I could say happy holder on Liontown. I think this one's in trouble. In fact, look at the shadow here. The shadow, it's not even bouncing. You know, if this can get above 150, or hang on to what you got left. If this fails at 150 with some more black candles comes down, then I'm not even go minus. I just go dump. I dump the other 2/3 on this and go find something better in that space, perhaps. Okay, because we know, like when we look at Sayona, bad stuff in that space can stay bad for a long time. And I've been really down on this one. People love it for some reason. They keep asking me about it, and I was, there's a reason why people aren't buying this one. Oh, but Carl, this one's a ripper. Let me tell you about it. I don't care. I'm telling you, the market doesn't care either. So that's Sayona. This one looks interesting. We've done some scratchings on this, and I think I said, just looking at my scratchings, we want to see some nice price action, and we want to see the demand buddy candle. So these are we call these our demand buddies. These are the buddies. They'll be your best buddies as well. These two candles, which indicate Are they? Maybe we're seeing them here. Look, it's looking better than many of others. A happy holder on this one for the time being. Understand you are going to have to deal with the supply in here, but I think it's worth hanging on to see how it behaves. When we get there, do we see more of these black candles? And there's been some selling on this. Or is it white candles telling us that that supply is now out of the system? But I think it's worth hanging on to have a look. Would I go a cheeky 1/3 here? No, I don't think so. Let me wait for that. Let me see how it responds here. And with the right candles, I could happily go the cheeky 1/3, but not yet. I think that one requires a little bit more cooking for you there, John. RNU, this is one of my favorite stocks at the moment. I'm going to talk about this one on the call tomorrow. Now, I sent them the list last week when it was down here, maybe on this candle, and it's gone up since then. But I'm a happy holder. It's a bit closer now, unfortunately, to the supply zone than I would like, which then does send the skew of the reward to risk the other way. Because if you can imagine where it was down here, I think it was when I sent it to them, because you can see it hit, so it did exactly what the other one did, LRS. You hit the supply zone and it popped in the nice candles. All right, and that's when I could go cheeky 1/3. Pop back, held. Okay, so the old POS. Here's your old POS here. Now that's a pod, which is good. Big tick. That's what we want to see. POSs becoming pods, and then the candles came in and popped again. Unfortunately, now it's closer to the next supply zone than the demand zone. But I'm going to go happy hold here. I don't see any reason to sell it. If you saw a bunch of black candles here, those supply buddy candles, then you might take some profits. But otherwise, you're on the track to holding this one because I think it's doing very well. So happy with that. That's graphite. It's not lithium, by the way. Okay, let us get back now to the Zoomers. And King has asked for CTM, which I think looks really interesting. Happy with that one. So why am I happy with it? Okay, so this is good. So look at the candles. I'm liking this one. Yeah, that's not what I want. I'm liking. Well, that one's not fantastic. I'm liking that one. There's a little bit of supply in here. There's obviously supply there, I know that. And that look where the supply came. I mean, I don't know when I drew this, but I drew it before. So there's supply, lo and behold. Like perfect. Nailed it. But yeah, I think we've got a nice motive phase through here. Motive being moving. Okay. A very shallow pullback with some white candles. I think that's very good. And the next move up, I think, you can target in here with some, stops around sort of 110-ish. Yeah, or maybe under 105. You're going to get at least 1-to-1. Happy holder on that one. No complaints at all. Would I buy? Would I go cheeky 1/3? Let me get to the end of the list, and then you're comparing. Because, look, if that was the only thing today, not sure. Not sure if I'd go the cheeky 1/3. Certainly if we can get a nice white candle, maybe pushing back into 120, then I could go the cheeky 1/3. But just based upon today's tiny little blip, probably not. But definitely a happy holder on that one. Look, I know I haven't done the old fundamentals for a while, so let us just have a look at Centaurus here for King. Just out of curiosity, is it making money? It's not making you money. Very little broker coverage. Let me show you what that looks like. There we go. Not making money. Very little broker coverage. Let's keep moving, shall we? Okay, so the next one we've got here is NST, another gold mine here. So bear with me. NST. Well, there you go. So this is a similar sort of story. Well, no surprise, they're both gold miners, but when you see that sort of push that we talked about, so through here, that shallow hook back, not sure why mine's not drawing very well, and we're going to here. Gosh, what's going on there? Oh, it's going back to front. Got a glitch here. I can't, my arrows are glitched. Look, cut a long story short here. Look, happy holder. I want to draw arrows. What if I do them back to front? What if I go like that? No. Okay, now they're back. Okay, let me delete this stuff. They're working again. Okay, so draw that back in because that is significant. I don't want to mess with that. We have got demand, looking at sort of demand areas for you. I think your demand's down here. And I'm trying to locate for you reward to risk on the trade. There is a little bit here, but I don't think it's really confirmed. If we can push up a little bit, then it will start to confirm this is demand and it will give you a better reward to risk on this last little bit. But really, that's what we're trying to squeeze out of it, isn't it? Last little bit. So let me go 100% hold. Happy holder. Today's candle is very constructive. I don't think I want to add a third to try and take this last little bit. I think your plus 30 was down here. I know we covered this. I know we talked about this a few weeks ago. So I think your plus 130 was down here. And I don't think you'd be doing it now because tradecraft, your reward to risk, I don't think is sufficient at this stage. Okay, so happy holder for you, Colin. Ramelius is, I know, another one we spoke about in the same sort of breath. Now, it has pulled back a little bit, hasn't it? Was this a supply event? Well, it got pretty close to the old long-term downtrend zone. Price action is not great. Look, I think be very careful on this one. It's not looking as good as Northern Star because this pullback here was far more severe. The Northern Star pullback was far less severe. This area here should have been demand. The old point of supply should have acted as point of demand. It hasn't, or it hasn't really done it well. So look, I can go a hold, but I'm more likely, I think, than Northern Star to be super tough on this one, right? Like the next sign of anything that resembles supply, I'd start banging out on this one. Okay, so just be more careful on that. Hey, I hope I'm wrong. I hope we get a bunch of white candles and then you're holding anyway, right? But I don't think we're at the stage where we're going to add a third anytime soon on this one. So it's less about adding risk here and more about managing exits. Not the right word, but that's on the radar. Okay, for that one for RMS. Now let us head over to the streamers here. Gold. People are loving gold at the moment. DeGrey, which I think looks okay. Well, there you go. I can't remember the last time we covered it, but manage your exit minus 1/3. Is that what I said? Because it hit the supply zone, maybe. If there's a supply zone, that's what you're dealing with. Some good news in that we do have a decent trough here, and it's I'm going to go broken record stuff. There's your POS, there's your POS, and there's your pod. Watch out for the break of that pod. Because that would cause you, I think, to manage some of the exit if you haven't already. If you haven't managed your exit, I'm happy to go hold on the basis that this candle's not terrible, and we've got a decent point of demand here, so you can see what you get. But you can see, hey, I could be wrong. This could just burst through, like it could just cut through that, like it doesn't even exist. Like boom, it's possible, right? That none of this matters. Or it's possible, right, that it does matter. You get what I'm saying? Get where I'm going with that? Surely there's easier stuff to trade out there than that one. SXG, is this easier to trade? Well, that's interesting, isn't it? I said 6 out of 10 last time. Oh, it's done well. Very early. It's hard for me to do technical analysis on something that's been around for less than 6 months. But this is all fairly good through here. This is clearly supply. And again, you're seeing supply zones, how they work. Look at that. Look at that shadow. Buy, hold, sell. I think this is starting to look, and again, this is a live candle, so if it closes like that or worse, I think you're managing your exit on that one. I don't think you sell at all because this is still very good, and you would just wait for another buy signal down the track if you have to add back into it. So I'm happy to go a partial exit on that one, but hold for the rest. Let us keep moving. Thoughts on the gold sector? Well, I think we've covered a bunch of gold stocks. I think they look good, but they are approaching, just by the very fact that they had fallen so far, areas of potential supply. This is what I saw today, Zimplats. Now, obviously the name suggests it's platinum, not necessarily gold, and some of you might know it better than me. But I just saw that little turn up looks very interesting there. That lots of black candles, maybe just keeping me back. Look, without going through the whole sector, I don't want to say anything just off the top of my head. Let's have a look at ARU. I know it's a very popular one for AN on the stream, and I'm a happy holder here. I know I tipped this on AusBiz, I think a week ago, maybe a couple of weeks ago now. So happy to hold that one. I know it is approaching this supply zone, but it is approaching it with a vengeance. I mean, it doesn't look afraid. And we've seen, I think, today, a bunch of charts where we're approaching that supply zone really tentatively. So like, think about what that means. I mean, the demand is tentative because they're aware of the supply zone. It's not just me who reads charts, but the supply is starting to build in advance of that. What does that mean? Okay, well, we're not waiting for the supply zone to supply. We're supplying now. Yet you look at this, and I can't see desperation on the supply side. And I can't see trepidation on the demand side. What can you see? Is this going to be, this is how this, at some stage, these conversations need to transition from what I see to what you see. If you get what I mean. So what do you see there? Are you seeing the same thing I'm seeing? And this is kind of your, a check back on you now. How are you progressing during these Tuesday sessions? It's like therapy, because I see this and I can't see a lot of trepidation on the supply side. I can't see a lot of trepidation on the demand side, and I can't see a lot of desperation on the supply side. So I'm a happy holder there. Would I buy it? I think it's almost that strong. You would buy it even here, even though probably your buy zone is closer. Your buy zone was, I know hindsight's a wonderful thing, but I'm pretty sure I talked about this last week, the week before, down here. So happy holder on Arafura. Let us keep moving. Let's head back to the Zoomers. How are we going on time? We've probably got about another 10 minutes. So I'm going to pick it up. We won't do any more fundamentals, and we'll start to pick up the pace here so I can get as many done. There's just far too many people in these sessions now for me to get everybody's stuff done. So apologies on that. Again, call Think Markets and say, hey, look, I wasn't a client. I'm now a client. And because I'm a client, I want you to put on a client's only extra sessions with Carl. And that's something we'll do, but we need to get the traction. We need to get people opening accounts. There can't be just obviously goodwill all the time. I think Markets is a business, and you need to open an account, start trading with them, and then we'll give you more stuff. Okay, so Waypoint REIT, I'm a happy holder here. I can't see any reason until you kind of get to these two candles to sell it. Okay, I can see a reason. Sometimes I look here and I speak too quickly. And then I look to the candles. And that's how my eye works. My eye works by looking at the trends and then drilling down. So the trends are just a quick look, summarizing the price action. And then the next step is I go to the price action. So, oh yeah, that looks okay, because I've looked at this. And then I've gone, well, actually, looking at the price action, it might not be okay. So let us draw a line through here. I think we've found that this is a pretty reliable pattern through here. So POS, POD. Yeah, and whilst neither of these two in isolation are sufficient to really panic out of this, I think there is some supply in and around this area. I think, you've got to be the most bullish person on this company to think there isn't. So maybe, but not maybe, I think beneath that you would go minus 1/3 at that stage. So beneath the POD, minus 1/3, I'm on the record there, and hold on and see how you go with the rest. It's not the strongest trend. If I would say, so personally, I wouldn't own this anyway. Isn't that interesting? Like, I wouldn't own this stock. This is not a stock that would be in my portfolio in the first place. So to say, well, we'll hold on to the rest, well, I wouldn't be in it. But anyway, if you are in it, you obviously like it for a particular reason. I think I know why you like it. But yeah, it's not a clear-cut case of overwhelming demand, is it? On that one. From Hanelli, I sold this due to the chart yesterday. Oh, look, there you go. I'd like to jump back in. Hey, Hanelli, wait a second. Hold up. I sold it due to the chart yesterday. Okay, well, that's interesting, because maybe you saw some of the stuff I saw there. There you go, which is very neat. But what I'm concerned about, Hanelli, is the next part of the statement, which is, I sold it yesterday. Now I want to jump back in. All right, take a chill pill. Don't look at this one until you see a giant white candle, okay? You don't have to worry about it. I think you made the right decision. Don't doubt yourself, okay? Chill out. Don't jump back in. You know when you would consider jumping back in because you just got out is if you saw something like that. It's had a decent pullback and it's just starting to make those high peaks, high troughs. The big white candle. I reckon that's a cheeky little, sneaky little plus 1/3 there, okay? But trust your judgment, I think, because I think it's sound. We've done RNU for Perry, so hang on, I would say Perry. I think that looks very, very good. Supply is coming up. Doug's asked about Wesfarmers, which we've also done. And then Peter's asking about BAS. BAS, what's... Oh, okay, BAS Oil. Okay, well, this is a little battler, isn't it? The old BAS Oil, because if I zoom out, you can see that it's been a sketchy ride for BAS Oil shareholders over many, many years. And my guess would be there is no less than about 3 billion shares sitting around on BAS Oil. That's what that would suggest to me. But look, it's impossible for me to do technical analysis on this. Hopefully you can see why, Peter. There's supply here. Look, there's clearly supply. I think you have to manage your exit to some extent. I mean, this candle, yeah, look, easily minus 1/3, if not more. And I don't think there's any harm in maybe dusting a couple of the thirds and just having a cheeky little plus 1/3 to see how you go on that one, because it's not exactly screaming sustained demand after whatever news event this was. And I'm guessing, given the name, they struck some of the good stuff. Nufarm, I love. Now, this one's easy to do technical analysis on, right? I like this thing. I think this is a great looking chart. I'm happy plus 1/3 here. I was happy plus 1/3. You had me at this candle here, which was their results. I like it when stocks go up and print nice big white candles on results. So you tend to find the buying is not all done on that day. So I'm a happy holder here. If you've got it, I'm happy to even add 1/3 today if you don't, but keeping in mind that there is a bit of supply up and around this zone. But from a reward to risk perspective, I reckon you can at least make the 1-to-1 work from an entry around here. So I'd be happy on that one. Let us do DUR for Julian. Now, Julian wants to know if this is a supply event. It's hard with these small stocks where you can see the candles aren't those, they're not, what's the right word, normal flowing candles. You get a lot of blocky, see what I mean, blocky candles, very little trading, and then you get some really sketchy ones. So you have to understand, I can't give you a definitive technical analysis read on everything if the charts are sketchy. And I could say, oh, well, okay, well, these are two black candles, they're supply, but you've seen where it hadn't mattered in the past because it's so illiquid. I can go hold. I'm going to defer to the trends here. I'm going to go hold on the basis of those two trends. I don't think there's enough necessarily just in that cluster to say manage your exit. It still looks pretty solid through here. If it sort of turns beneath that low there, then I don't think you'll have any choice of that low 50.5. So close below 50 again. I think you're going to have to do the sensible thing and probably take some profit. But look, if you're really nervous, minus 1/3. Otherwise, happy to hold on the basis of those other trends at this stage. Let us go to John. Can I have your view on CBA? I think CBA is fine, John. I don't, happy to hold. I'm not a buyer because it's too close to this. I think you buy, and I hate to say this because it's the opposite of what I truly believe in terms of trends, but they're bloody Aussie banks, and this is what the fund managers do, right? They buy them when they go down, they sell them when they go up. I hate range trading stocks. BHP is another one. Well, there you go. You buy. Just don't use technical analysis on those ones. Is probably my advice. I finally got some coming out in the Twitter. No, just followers, new followers. Yeah, follow me on Twitter. Let us keep moving. LSF, long short fund. I can go hold. Would I buy it? Look at the candles again. A lot of blocky candles there. Very illiquid company. Definitely a hold. Look, this is turning. It's broken above this. It's holding. This has gone orange in the traffic light system. But again, it's a function of the market. We've had a pullback on a lot of stuff. A lot of stuff is trying to get back up again, and you're going to hit these supply zones. Look, I think you want to get to the point in these situations where you say, hey, Carl, would you buy that with your money? No, I wouldn't put my money on that one. But if you've got your money on it, well, yeah, I don't think you need to sell right now. But you see those big black candles around here, and I'd be thinking twice about it. But there's enough in it. This turnaround, high peaks, high troughs. Why? High peaks, high troughs, predominance of white candles, trends are turning. I can absolutely get to a hold. I just think with all this stuff holding it back, I'm not at a buy on a reward to risk basis. Okay, just to make it very clear. Jen's broken the golden rule. She's asked me about Sandfire. I'm going to skip over that one. We have done Sandfire already, Jen, if you didn't catch it. EMV, which I think looks good, Easton. So happy to hang on to that one. Would I buy it? Is it a cheeky, sneaky buy? You know where I'm going to go. I'm going to draw red boxes all over the bloody screen, aren't I? But that's miles away, so that's fine. And this is all good. I'm happy with the price action through here. You can see the trends are turning, much like the last one, but it's got a bit of get up and go about it, So this is actually really, really handy. So let's go LSF. I guess if you zoom in, anything's possible, isn't it? Let's go normal and do the double, and then you can compare like for like, isn't it? So let's go EMV. Oh, okay. Well, now that you mention it, they're pretty similar, aren't they? And that's how deceptive zoom can be. So it's really important you do go back to your default zoom every time, okay? I'm much like LSF. Hold it. There's nothing really here in the candles to suggest you need to sell it, but understand the candles are sketchy, right? They're blocky. They're blocky candles. So the best I can do is say the trends are heading in the right direction, and happy to stick with it at this stage. Would I be a plus cheeky 1/3? I'm more likely to go that on this one than I am on the other one, if that helps. This is a hold for me. I was interested in the big white candle on the 7th of November, which I'm guessing might be that one. Yes, it is. These, again, because it's the illiquidity means you can get a white candle like that and then 2 black ones like that straight away, and then boom, straight back up again. But yeah, I think it's fine. Have missed out on 25 to 30% gain. Oh no, did you get out? Oh, you got scared by the two. There you go. Kind of answers that question, isn't it? So if we're on, I don't know what's a good example, like Nufarm, deep liquid. Candles make more sense. Wesfarmers, deep liquid, candles make more sense. When you get to stuff that doesn't trade very much, then candles that can be less reliable. But I can see why you got scared. Because it did that and that in the zone. And I totally agree. That, yep, that just looking at that on the basis of nothing else, it took out the two demands. I don't think you did anything wrong. I don't think you need to regret it and go, oh man, I did something wrong. No, I think you did everything right. That's the nature of the beast, unfortunately, when you get to these less liquid companies. Okay, frustrating. I know you missed out on a bit there. Was I right to be cautious? Yeah, I think you were right to be cautious. I think I kind of answered your question in advance, but it's a very good question. Okay, let's do PLS because we haven't done enough lithium stocks today. I was concerned. I think I'm still concerned about this one. Today's candle is encouraging, but I'm concerned that this is one of those patterns where we see quite often we kind of do this, and then we do this. Okay, now I hope I'm wrong. Don't get me wrong. Where we've got demand side market. And we've got equilibrium market, which is where I believe we are. Think about what that means for Pilbara. We're not in a demand side market anymore. We're in an equilibrium market. There's just as much demand as supply out there. So all the true believers, they're being met. The demand from the true believers has been met by people who don't believe the story. What does that mean? Somebody's going to win this battle. And do we move then into the supply side market? And I don't know if that's going to happen. I don't know yet. I can't tell you because we're not there. But what I can tell you is if we break beneath this area here, right, that's going to make us more likely to be doing this than doing doing that. I can't draw an arrow because there's not enough room. If I do that, you can see where those arrows were trying to go. Okay, so do we break back into the demand side market, or do we break into the supply side market? I think with the black candles, the 3 peaks, the upper shadows, this is all fingerprints of supply stuff. And I'm sorry, I can't remember what I'd said last Tuesday. I apologize, but I'm pretty sure I said something like, trim, take at least some profits off the table. If you haven't, I still feel like that. Okay, what could change my mind? Big white candles. They're great mind changers. Until then, I don't think you want to hold a full position. Hey, I don't think you want to be all out either, because there's enough in it to say, well, let me see where it goes. And you're saying, Carl, I want to get out. I feel so bad. I want to get out because I've done really well on this, Carl. I got in $2 and every fiber of my being wants to get the whole hell out of this. And I say, well, I get it, but who's to say this isn't going to be a $20 stock in 2 years' time? Oh, well, to be fair, if it does get there, we'll have other signals to get back in too, okay? But you need to be able to have some skin in the game to continue to get those big picture wins, okay? If you're going to be that person that gets jittery after you've made the smallest bit of money and jump out, you'll never have big wins, and you're going to whinge about it all the time. You're going to say, I never get the good ones, Well, that's because you keep getting out too early. AGL. Well, Haneli, I'm going to have to do the last one for you because there's a bunch of other people that want to ask questions as well, but that's all right. Keep asking them, of course. It's my job to curate the session. A happy holder there. I don't think I'm a buyer for all the reasons I've talked about today a million times, supply levels and risk and reward. But you can see even here, Eastern, how like the candles just make a bit more sense, don't they? They're just a bit cleaner because we've got liquidity. So we're really seeing a genuine interaction between demand and supply. Let me finish some YouTubers. Oh, look, we're going to finish. I'm going to do 5 more super fast, and then we're out of here. I think Jay's having a chat. I'll chat with you later, Jay. Nuix NXL, I think that is from DE. Oh, okay. This is interesting. And he goes, hey, Carl, that's the opposite of what you like. It kind of is, but that's your trends. And then I go to the price action, and you all know how much I like big white candles. Now, this would be far more interesting if it didn't have this shadow, okay, because there are a few people who say, okay, I'm getting out of here. But I'm going to find the next supply zone. Next supply zone's up there. It's not out of the woods. You'll want to know, is this a cheeky plus 1/3? Not far away from a cheeky plus 1/3 because, like I said, it's just a third. If you get it wrong, you get it wrong. And what's your downside? Oh, I don't know. Plenty of demand around here. It's held up. Look, no, not for me today. I'm going to keep an eye on it. Ask me next time, DE. I would suggest to you, though, if you can get a nice white candle, so here, right? Let me draw what you need to see. Okay, so if you get this candle here, I don't think I can unfill it at this stage, so I'll have to do it in 2 steps. But if you get that, all right, now it's not going to look like that. It's going to look like this because it won't have a fill. There we go. That's when I would go cheeky 1/3. Okay, plus 1/3. So keep an eye on this one. Yeah, when I get it on Tuesday again, when you see that candle, that's when I would go. The cheeky 1/3, closing above that high there, which is 74.5. So close of 75 or better. That's when I think you have a crack, even with that supply there, because I think there's a little bit of a turnaround. Now, is this going to go back to $11? I don't have a clue. I don't care. Maybe. But that's not why I'm interested in it. I'm just interested in it because it looks like that we're shifting from that equilibrium phase maybe back to a demand side after having such a huge supply side for so long. Okay, as I said, 4 to go. Now, let us go to, I'm not going to do that one, NASCAR all out. I might get back to you in the chat later on. Mineral Resources, I think, looks amazing. So we've looked at Pilbara. That one's looking less amazing, isn't it? This one looks very, very strong. So I'm sure you've all bought it already. We've talked about this for many, many months. If you haven't, I'm no objections to adding some risk on this one. If you haven't, there's nothing in there to tell me that why wouldn't you buy it? Oh, it's going up so much. It's a ripper. It's going up because people keep buying it and very few people want to sell it. Why do lots of people want to buy it? Because it's good. I don't know. Look at the fundamentals. Why do people not want to sell it? Well, they don't want to sell it because it's good. Look at the fundamentals. 3 to go. We've done PLS triple top, says Jay. Quite possibly. Let us go back to the Zoomers. CCX. Okay, we're scraping the bottom here, aren't we, everybody? No. No. This is not. The question is, this is not a CTT. And this is the risk. This is a nice little segue. Because I went and showed you Nuix, didn't I? I got you all excited. I got you all afluster on Nuix. Let's go to Nuix NXL. Well, I think that's better though, isn't it? That's better than this. Let's go back to CCX. Oh, that was still pretty good. High peaks, high troughs. Sort of got it to sort of orange. And we are scraping the bottom. Hey, if you're going to scrape the bottom, right? There's an old saying about trying to pick a bottom, right? And I'm not talking about what's happening now because there's nothing happening here now. Right? So forget it now. This is a dud. This is not a buy. All right. But the question is, what does this mean for what I said about Nuix? Well, I think to be fair on Nuix, what attracts me on Nuix is the fact that it's done so much more of this equilibrium phase. All right. Where if we go to CX, at that point, it really hadn't done any equilibrium phase, really. It's really still trending down. So I would say maybe on the next one or the next one that you see this sort of white candle, then it's going to start to look interesting. Could I hold it? I could hold it on the basis that I've suffered so long and I don't think it's going to go down a whole lot more than where it is, but I'm not a buyer yet, okay? So yeah, and this reminds me a little bit of this old chestnut here, Dubber, okay? So understand though, if you're gonna take these bottom scrapers, right? There is a higher risk associated with these straight up. So if you compare NXL and Nufarm, okay, the risks are infinitely larger on NXL. So understand what you're getting into as well. Like, don't go into it saying, oh, I'm going to make $1 million. Go into it saying, I'm probably going to lose, but I'm going to have a crack because the reward to risk looks good. Okay. I think I'm 2 left, maybe. Wrong screens from everybody. That's how long that That was a go. I'm on the right screen now. I'm going to pick two interesting ones. Look, I'll do New Hope and then I'll do two more because I do want to cover New Hope because I'm curious as to whether it looks like Whitehaven. And there you go. So both of these now, I'm going +1.3. You heard it first on Ask the Experts, and then at CPU, which is a monster, happy holder there. And if you're not on it, then I'm a happy +1/3. And it does put some of the other charts we've seen into perspective today, isn't it? So that is a ripper, and NEU continues to be a ripper. A little bit of a shadow there today, but no, nothing so sinister that I wouldn't continue to hold that one. And then we're going to go QGL, which looks super interesting. There we go. +1/3. I have no idea what they do, and nor do I care. But you have to understand me, right? And I'm not you, and you have to be comfortable with how you trade and invest. I don't care what these things do, man. I couldn't care less. All I care about is whether people are buying them, and if there's more people buying them than are selling them, the price might go up and I might make some money. I'm +1/3 on that one. I think that looks really interesting, but it is a pure specky play. Right, and that's why we step into things. We might end up holding a bigger position in quantum graphite than we do in BHP if this keeps doing the right thing. But what I'm saying is your experience, your journey on any particular stock has to start somewhere. And I say start it small and then add to it as you go. I think we're done, aren't we? I think we're done. Let's get back to, sorry if you didn't get your question answered today, but as you can expect, there's lots of people around. So let us say come back next Tuesday, and I'll try and get to a few more of them. If you're on the stream, you can join on the Zoom. That's how you do it. There's the link down there, www.thinkmarkets.com/AU webinars. And as I said, hit up Think Markets, bang on to them and say, why don't we do some more stuff with Carl, but we're only going to, we're going to do that for the clients. And there's every reason you should become a client of ours. We've got everything you need to trade on the shares side of things. So you can do your self-managed super fund over here, CHESS sponsored, so important. But then you can also do the CFD side of things, start to trade some of those commodities, some of those indices like the NASDAQ, the Dow Jones, and all those weird and wonderful things, and obviously share trades as well. If you want to do those, we've got commission free, and that is going to save you a bunch of dough. We are an award-winning broker. We have offices all around the world, so not some sort of little fly-by-night thing that got started in a little back room somewhere. We are regulated all over the world, and that takes financial resources when you think about it to do that. So easy to use multi-asset platform. We've won a bunch of awards as well on your mobile or your desktop. Dedicated account managers. You get to speak to a real person, none of those silly chatbots, although if you want to do it that way, you can. And they'll get to know you and help you through your trading and investing journey, as I will. And if you'd like to hang out with me more often, hit the subscribe button if you're watching me on any of the social media platforms, or hit the like button as well to stay notified of all future updates and to let me know you like what I'm doing, so I continue to do more of it. Apart from that, it has been such a pleasure chatting with you today. Hopefully you learned lots. All the best if you're trading and investing. To catch up again. Bye-bye for now.